Hey guys, welcome back. In today's video, we are talking about the AMC payoff, the panic mode for short, why $400 is an easy target, and many more in this video. First, we take a look at this. AMC paid off 24.2 million of his 2025 5.75% unsecured debt with 5.79 million shares and about 1.04 million in cash. So once again, AMC is doing that fundamental decision where they're paying off the debt. And now we've always talked about why this is, of course, a good thing. One of the things that we talked about recently is also because of the 25 basis point Fed cut. We talked about how AMC managed to save $5 million in yearly payments. Now, by paying off 24 million, it puts AMC at an even better position. We're obviously able to spend less money every single year in the interest payment. Now, on top of this is why we are also reflected on why shorts are always suppressing the price of AMC. You can see AMC tends to pay off its debt with, of course, whether it's shares and of course, in general, just cash. And now this is why they need to suppress AMC, because they understand if AMC price were to be at an extremely high price, AMC is able to raise more money. And by raising more money, they're able to pay off their debt even quicker. And so this is what we talked about with the fundamental reason for why shorts are constantly trying to suppress AMC, is to limit them and their ability to, of course, raise cash. And is why we talked about why the fundamentals is extremely important. Whilst having good fundamentals won't allow AMC to, of course, go up into the thousands of dollars in terms of value, what it does do is, again, put AMC on the map. It allows AMC to survive. It allows AMC to have money to pay off the debt, which ultimately will lead to the squeeze. And that's why the fundamentals is important, as we can see from this. And you can see, why do they have to wait and suppress AMC to move midday and late day? Why? They let everything else run hard while pinning AMC to try and tempt them to chase other diamonds, as so to appear AMC is dead. Why do they do this? Because it is the mother of MOAS. And so we talked about in terms of the impact AMC will have when we take a look at, back in 2021 in terms of the margin requirements for AMC. And you can see for Robinhood, AMC took up over 50% of the collaterals of Robinhood's capital requirements. And that already is showing how impactful AMC will be. Now, on top of that, when we understand that AMC has had more synthetics created than any other shares, including GME, you understand that when AMC runs up, they will have to pay even more money. This isn't to say that GME won't run, but it's to say because AMC is at a lower price than GME, it's again more cheaper for them to create more AMC shares. It's easier for them to create more AMC shares, but that is also a double-edged sword, because when AMC starts to run, they will have to pay off for the amount of shares that they have created. And so this is the impact that AMC has. And we can see the question is, which short fund will want to close their naked short position first on AMC and GME before the Trump administration sends them in jail? When you take a look at the panic mode that these short sellers are in, you guys can see the orders coming in for AMC, 4,588,000 shares. Now, this is what we talked about. Now, when you take a look at the level 2 data, what you will constantly see is these large orders coming through for AMC, obviously with the impact, with the incentive to suppress the price of AMC, to push the price of AMC down. You can see that whether it's from these large block orders or because of the constant spoofing. And this is a question you got to ask yourself. Why would they constantly feel the need to suppress AMC if there isn't something that's going to be affecting them? And again, for the short sellers, the reason why they need to bring down the price of AMC is because if AMC were to go up to $50 per share, $100 per share, they will already be losing billions of dollars. And at that point, they will obviously have to cover the AMC shares, which will then make the AMC share price go all the way up into the thousands, tens of thousands, and that will cause all these hedge funds, all these institutions, all these short sellers to, of course, go bankrupt, and for the money transfer to go from the institutions to the retailers. And that's not what they want. And that's why they constantly suppress AMC. And you can see for GME as well, and this is why we talked about kind of the pressure is really starting to come on for the short sellers, for the institutions. We're seeing AMC on one side doing well. We're also seeing GME do very well. Some heavy volume appearing in GME dot pool this morning. Separate orders for 25,000, 20,000, and 18,000 shares. Something is brewing. So once again, we're seeing the dark pool volume go up, and we've seen this in the past before. Recently, we've talked about how blocks of 5,000 GME options were being bought and how that could be a signature move from Roaring Kitty, especially understanding that he's sold all of his Chewy positions recently, meaning he has a lot of capital available to use. You know, there are multiple things right now that allows us to understand we're seeing the volume kicking in. We're seeing something brewing. We're definitely going to be seeing some sort of action happening for both AMC and GME. And you can see how it's reflecting on this. Whether it's for AMC, we can see the institutions buying, we can see the technical breakout, we can see how well they're doing fundamentally, or GME, whether it's with the options, whether it's with the dark pool volume, you know, all of these things are coming in for both of these stocks. Another thing is GME was halted on German market. So another thing that obviously for us to understand, and the very fact you guys can see status trading halted. So this could also mean something. We've talked about how European market has been obviously used as one way of locating shares of AMC and GME, of a way for them to, of course, offload some capital. And so by seeing trading was halted in European market, we could be seeing something that would reflect the same in the NYSE, and just in general in terms of understanding what's happening to the shares right now. Furthermore, $400 for GME is a easy target. Now that Trump will soon be in charge, hedge funds / market makers won't dare take out the buy button. Therefore, 2600 is a real possibility, along with AMC hitting all-time highs. Taking away the buy button only postponed the outcome. Because one thing that we knew was the very fact they took away the buy button was the reason why AMC and GME didn't squeeze in the first place. But something that we also knew was the very fact that because of that, it postponed the whole outcome. Because what we have to understand is that the shorts are still trapped in this play. Just because they took away the buy button doesn't mean the short covered. It doesn't mean that the shorts weren't trapped. Because if they weren't trapped, if the shorts are fully covered, they won't be doing everything that they are doing now. We won't be seeing the very fact that we have orders coming through for AMC selling 188,000 shares. And you know, there are multiple other indicators which have, of course, shown us that. So we know that the shorts are still trapped. And now with Trump, someone who obviously dislikes Ken Griffin, like we've talked about in the past, someone who's obviously has good relationship with Elon Musk, who's also a person who's been very vocal about short sellers and his dislikes for them. You know, we're definitely going to be seeing possibly the regulation to be on the retail side, or even more specifically, to be against the short sellers. And so now that we won't be seeing the buy buttons taken away, now that we have everything building out, we have all the short sellers taking a hit. You can see how recently short sellers have lost money with DJT, how short sellers have lost money with Tesla. They are in a very bad place. And the next things to happen to them will be how short sellers are responsible for, of course, the squeeze of AMC and GME, and they'll have to pay tens and hundreds, if not trillions of dollars for these shares. And that's what's going to be, of course, happening. And you can also see here, GME glitch, we'll take a look at the cost to borrow, and that 2.6 million shares, what we had was the fee to be zero and the rebate to be zero as well. Now, something that we talked about yesterday was how a large amount of GME shares were borrowed, costing them tens of millions of dollars. And now we're suddenly seeing 2.6 million shares available of GME for 0%, meaning it won't cost them any money to be borrowing these shares. Why is this happening? Again, this, like I talked about, this is just another factor indicating that the shorts have never left this play. The very fact they need shares and yet they don't want to be paying for these shares shows how much capital they're lacking right now. It highlights the illiquidity issues that we've been talking about from the very, very start, because it is costly for them to be borrowing these shares. Remember, we've talked about how they're paying millions of dollars every single day. And whilst 1 or 2 days won't be eating into their capital because they have billions of dollars, it will add up, and it seemingly look like it's starting to add up right now. Because remember, if they have to be paying $5 million every single day, in just 100 days, this will already be $500 million. And again, this has been going on for way longer than 100 days. And now the fee, of course, is bouncing, and it is different every single day. But we understand is that they are paying the money, that they are facing that illiquidity issue, and is why we're seeing this 0%. Another thing to be looking at is, of course, the reverse repo, $178 billion. Now, like I said, don't panic just because it's going up. We saw it at 140 and now it's at 178. 178. It doesn't mean that the whole thesis is over. Like I said, it will fluctuate. It will go up. It will go down. The most important thing isn't what's going to happen tomorrow, but it's understanding in a 30-day average, in a 60-day average, is the reverse repo going down? And the answer to both of that is yes, it is. So don't worry just because last week was 140 and now we're 178, because what we need at the end of the day is for it to go down kind of just in the future. It doesn't have to be tomorrow, it doesn't have to be the day after, but we want to see this inevitably go to zero, which again, with how the rate is going at right now, it will. And when that time comes, when reverse repo goes to zero, the shorts will no longer have liquidity, and that will be the squeeze. Anyway guys, thanks for watching. I'll catch you guys next time.